Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 167. Now, in today's episode, what I'd like to do is take a look at some fundamental data as well. What are the news articles and some of the news things happening in the press? How will it affect stocks and my personal take on it? So that's really what I'd like to cover, along with getting into some of the technical data as well on some stocks, some indices, even some Bitcoin, the US dollar, and just overlook on some of the charts. Now, normally I focus on the technicals because the technicals will always dominate the fundamentals. The fundamentals are the core. They're kind of the soil. They're the foundation to things. But when stocks are in a panic or when people are buying on emotions, the technicals will always dominate. Imagine there's some kind of emotional turmoil that all of a sudden happens. People are just selling. They're not worried about the underneath fundamental health of something. They're just looking at the price. They're looking at what's happening to their portfolio and they're getting out. So it happens on the emotional side to the sell side if you're bearish or even bullish. So we'll look at some fundamental things right now, and then we'll also take a look at some technicals, and I'll give you my personal take of what I see here in the marketplace. So let's get started here and in this next segment. So the first thing that I'd like to do is take a look at some of the stories that have been happening. Now, right now, there's this news catalyst that's talking about the government shutdown. The government could shut down. Think about what they just did when it comes to the taxes and the tax plan. They basically gave away trillions of dollars in order to fund a tax cut. And now they're worried about a government shutdown. More than likely, they're going to print a little more money, find the money somewhere, and be able to keep themselves employed. It's like saying, hey, if you own the company and you own the corporation, if you're a government entity and you're saying, hey, well, we can't start the job today. We can't go to work today. These are the guys that run the country. So is it possible that there could be a little hiccup? Yeah, it's possible. But the thing is, most of the time they'll just change some things and they'll continue running the government as it was because they're the ones in charge. They'll find the money somewhere. This is how it works and operates. They'll just continue to increase the debt, which is what they did when it comes to printing out all these tax cuts, right? They could have given every single American $17,000, if not even more. I think $17,500, give or take. And that could have stirred the economy and jump-started some things. But instead, they gave it to the corporations, hoping it trickles down, which is fine. That was their plan, and that's what they wanted to do. But the thing is with these tax cuts, what they're really doing essentially as a government, okay, if you look at some of these tax cuts, let's just take a look. There's the Federal Reserve. Dudley warns that tax cuts putting the economy on an unsustainable path. Just think about what the tax cuts really do. If you go in and think of the government as a person, if you, Bob, go in, let's say your name is Bob, you're going into a job in a workplace, and you are getting paid $75,000 a year. That's your salary. You're going into this workplace, you're getting paid $75,000 a year, and all of a sudden you say, hey, you know what? Why don't you, instead of paying me $75,000, why don't I just take $45,000? That's okay. I'm okay with that. And in order to finance that, actually, you can go ahead and add some debt on my credit card. I'm okay with that too. So if your credit card was $10,000, now it's $30,000. Basically, that's what the government is doing. It's saying, hey, we don't want any more money because remember, the government makes money from taxes, right? It collects taxes to make more money for the government to pay off its debt that you get to China and all these transactions through trade that they do. So they're getting all this money from taxes, but now they're saying, hey, we don't want more money. We just want to give it to, the corporations. It's okay. Let the company keep it because eventually I'll get my bonuses. Just think about it. If you go into the workplace and you work somewhere and you're going to say, hey, nah, don't worry about giving me any more money. You don't have to pay me this week. I'm so confident in your company. It's going to do so well. You'll probably give me a bonus eventually, right? And that's really what it comes down to. Think about it. So this really creates, and this is why Dudley over here warns of unsustainable path. The thing is remember, with fiat currencies, they eventually fail. So we always keep pumping the bubble. We pump any bubble. And eventually when it collapses, anytime any markets really collapse, if you look like on the S&P, when we had any kind of crises, pullbacks, those kinds of things, what typically then happens at these points is then they go ahead and put a little confidence in the system. They'll go ahead and say, hey, we'll print more money. We'll give you a stimulus check. They'll do something to bring it back. And that kind of sustains it. But really, the people that were at fault are getting rotated because 5 or 10 years later, they get a new job. They're not in the Fed Reserve anymore at the time. They're not president anymore because those things were building a little bit before that time frame, even on that unsustainable path. Because America, it's all based on debt. Most people, they don't have money in their bank account. Most people, they don't have $1,000 in emergency funds. They're living on debt, paycheck to paycheck. And this is what happens with the big corporations. They go ahead, they pump this economy high, they make as much money as possible, and then the economy pulls back and tanks, and then it'll bounce again. I mean, that's just nature. And with inflation over time, this continues to just skyrocket prices. And that's why your cereal boxes continue to get smaller. Cans of soda go from 12 ounce to 6 ounce. You're seeing the miniature ones. It's almost a marketing branding thing, but really it's a reduction. You get 30-40% less product. And that's what happens here with the market. As this SPX continues to move higher, you got to remember what's happening. As your money in the market continues to move higher, the dollar actually continues to weaken. And part of the reason this dollar is also weakening, especially today here, this last couple of days, is this government shutdown news. So this is also part of the problem, is when you look at it, part of this government shutdown news catalyst is trickling into the US dollar. And you can see since 2017, I talked about this before, really since those election times, this thing has been going down. And in some cases, this is a good thing because of trade. But if it keeps going lower and lower, nobody really wants our money then in that case, because America is funded through debt. It's not a positive country. It's in the negative. Anyways, my point here is when you're looking at all these things, you're also evaluating how is the day-to-day person operating and how is the market sentiment. And a lot of people are getting invested here in Bitcoin, cryptocurrencies and things like that, and they're getting invested in them through debt, through credit cards. They're getting invested in them by taking out loans and on mortgages on their house. Think about it. So you have guys and people that get into Bitcoin, let's say at 14,000 right here per Bitcoin. Even some people probably got in at 18,000, and now this thing's been pulling back quite a bit, and it even got down under the $10,000 level, and people were worried. And now it's bouncing a little. So you'll probably see in the news that, hey, cryptocurrencies are fine. We're doing a little bit of bounce. It's okay, so we'll bounce a little. And it's true. When you look at the overall trajectory here at the little bit of pattern here on the channel, we are getting a little bounce. We are going to probably get a little bounce. You might even get a bounce to about 15,000. And then it'll probably roll over further. And that's because you're looking at the volume that's being put in place right here initially on that sell side. It's starting to build. And that becomes a problem, especially since we cleared this support level right here. And if it can't get back above this and hold and get back above 14,000, you could see further lower prices somewhere around the $8,000 level, even somewhere around maybe even lower than that. Just depends if there's panic that sets in, maybe around $6,000. Now, can it stabilize after that? Absolutely, because more money comes in. People are like, oh, well, now it's a good time to invest. I mean, I missed it a little bit earlier, but now it's great. And that's what people do. And they take out loans for this. And some people are at $18,000 just now hoping it gets back up. I mean, imagine you put 100 grand in this and you took a 25% tax cut or a 25% cut on your investment. That's basically 25 grand. You lost 25 grand in a month or two. So anyways, some things for you to think about on the big picture scheme. Let's take a look at the individual market overall. If you look at this market, we're trying to hold this 2,800 level on the SPX. We're at very stretched valuations. If you look at RSI, which I don't usually post as much on it because it's not my main decision maker, and I don't want you to get sucked into these indicators. But the RSI is at some of the all-time highs for being overbought, these levels. And you look at the stretch valuations here, this thing is stretched. Even a couple red days would be healthy for this market. But right now we're at 2,800 basically on this market, and it can continue pushing higher. You might even get a blow off top, and that blow off top might come at 2,860. It just might open 40, 50 points higher. And that's usually when you know that panic will set in very soon, because you get the blow off top, euphoria, and then things sell off. But right now, because the mom and pop, they're getting into Bitcoin, they're investing in here and there, the money is coming in. You're seeing it from the regular person. And usually when that happens, that's when you need to be even more worried. So this is why I'm looking at things that this is already causing some turmoil and trouble. And if you look at the VIX, this VIX has been picking up quite well, right around the $12 range. Now, we might get some more updates here soon, but you could see this VIX starting to climb above the $12, which also is a little bit of a way for the big boys to protect themselves because they're buying puts, right? This is what the VIX measures, is more puts are being bought. So they're buying puts to hedge against the downside move. They're buying puts to protect their investments, but if they sold those investments right away, you would see it in the market because the market then would start selling off. Instead, they'll do it through the options, keeping the market stable. And then eventually, boom, when the dump happens, they're at least breaking even based on the puts they bought. And then, they'll buy it back at lower prices, the market that is. So anyways, these are some things to think about and be more cautious about. It's not to say the market can't go higher. It's not to say the market can't go lower. You as a trader and an investor are managing risk. And what's the potential? What's the probability? What's statistically possible? Because imagine, hey, this thing goes even higher. How far stretched can you get? Well, just think about it. How much weight do you think I could bench press or weight lift? Or how fast do you think I can run a mile? You think I could run a mile in 1 minute? Is that statistically possible? How about in 2 minutes, 3 minutes, 4 minutes? It gets a little more probable at that point, right? 5 minutes, 6 minutes? Right? What is the chance? And this is what you're doing here. In 10 minutes, you think I could run a mile? So here, this is what you're doing with stocks. How fast are they running? How fast are they running to the upside? Right? Is it in 1 minute? Are they running really fast? If they are, it's going to burn out very quickly because it's not probable. It's not possible to sustain that for a long period of time. Think about that on the speed factor. Anyways, looking at a few stocks, let's just take a look at here, the Travelers Company. And want to just show you a few variations on charts. Again, if you want to take a look at some charts and some recaps that I do, take a look at the critical charts. This stock could potentially break out soon, and I only say that because of the bullish volume they're coming in, and it's coming in right at this resistance level. So take a look at that. Watch it closely. Again, if the market pulls back on any of these things, well, it could take any of these stocks down that we're talking about here. But you can see this is starting to pick up a little bit here on Travelers. Had an AT&T question from a member there, a subscriber on YouTube. Just wanted to point this out. This was from last week, actually. Same thing. $40 is kind of your line in the sand, a bit of resistance right here. This stock pays a huge dividend. Percentage yield I'm talking about. And when they do that, that's because the stock price has not been performing very well. Really, if you look at it, this has been a core problem in this price range. The stock did have an A to B, B to C, C to D pattern earlier on, but since about 2016, it just sold off, right? So let's bring it here, green, sold off right there, and then tried to get higher, and again sold off, tried to get higher, sold off. You had a lot of problems on the selling side of this stock. It had this one breakout little area and region, but other than that, it's had some problems. So that's why it pays a larger dividend to compensate for the lack of appreciation. And you have resistance here at the 40. So 39, we had a webinar with Ken Calhoun. He talked about the 9s, and you can see the same thing here, 39, rejection right at the 40. It's having some trouble there on the weekly, daily, same issues. You can see the pattern right there. Let's look at Charles Schwab, actually. Here, we've had this as a stair-step pattern, okay? And you can see, again, we're breaking out, and we had some nice volume there on the bullish side. So again, stock continues to move well over the last week, and you can see that stair-step pattern continuing to evolve after a slight digestion in the 50s. They've been talking a lot about oil here on these stocks on the news, and here we're looking at $20 on Marathon Oil. If it breaks there, you could be a little more bullish, but overall this oil has been a bit of a trouble. There's some ABCD patterns here that have been created in the past, so you can take a look at those as well. But overall, if it breaks the 20, you could see a little bit more push into higher prices. But the problem is the volume is a little bit weak. And with the dollar falling, if you think about this, the dollar's falling, the commodities, how is that going to affect oil? And in my case, could be a little bit of trouble, right? So meaning it could get into the 20 and reject it. So we'll see, because our consumers or regular people, they'll still buy gasoline and oils used in plastics. There's a lot of things it's used in. So you'll still need oil in a lot of areas and industries, but is the consumer willing to pay for that? Sometimes there's negotiations that take place. Other times there's supply and demand issues that also based on production pipelines that happen. In either case, looking at this, it could be trouble at the 20 for Marathon Oil. And if we look at ExxonMobil, you can see we're breaking out right here at this price point. Otherwise, oil is quite low, right, relative to the past. If I bring this chart out to the monthly, you can see it's quite low, right, compared to where it used to be. So we're getting again into higher prices at that point. And if you take a look at the weekly, you can see we have a bit of, and here I'll just point a few of these out for you. A few swing points here hitting at this level, right at that 90 area. And even here we broke out a little beyond that, but you can see right there, that could be a little bit of trouble, a little bit line of resistance. Now here we are getting a little more volume on ExxonMobil, but otherwise that could be a little bit of trouble even though we broke out right there. And that's because we've already had a fairly nice run from about the 75 level, 75 to almost 90. It's pretty good run on ExxonMobil. Let's take a look here at MasterCard, also another one. I pointed this out to the members not too long ago, about a week or two ago, and some of those members did quite well with this stock from 155 to 165 for about 10-point gain. You know, obviously you take profits in the strength. So here, stock broke out, you got in it, even if it's the second day, then take some profits, take some more profits, and maybe sit and hold and be patient then, because you did have some good volume there coming in after a little bit of a decrease there in volume, and then it picked up. And that showed you that this was the consolidation time frame or period. So anyways, that one looks good for higher prices. If we go to ADI, also right here, swing point creates your line, continue to draw it across, resistance, there's your breakout, build in volume right there. So this is your entry point right here. Stock looked good, $3 or three bar move. So it moved from right around, let's say you got in at $93, $94 to about $97, couple dollar move right there. Looking good for higher prices as long as that can hold. Here's the weekly chart. If you look at the monthly chart, continues to do well. You do have some overhead resistance up here, and this is why you check the long-term monthly chart, because as you get into the 100, you might have some trouble. So be very careful and take some profits into strength. Here is BIG. And you can see this one for big lots, you're coming in right at this support and resistance line at the 60. If we break above it, this could look good. You can see the volume starting to build a little bit. You have a few bars picking up right there. It may start to build here. And now we got a little bit decrease in volume. So be very careful. You'll want to see that volume break and break the 60 because you have that resistance. If it can do it, you might see some higher prices. Take a look at the weekly. You can see you're at all-time highs there. So a break there could be nice if you're able to get that. But you want to wait for price, action, and volume, behavior, break in the chart pattern, all those things to confirm your move and analyses. So anyways, that's just my current thought overall on the market, how things are moving, acting, behaving. I want to thank you so much for joining me here on another Let's Talk Stocks episode. If you enjoyed some of the news commentary at the beginning, let me know and we can do more of that. I plan to continue to do this time and time again on Thursdays, as far as doing some reviews on stocks, charts, and what's happening in the marketplace, to give you an insight and perspective on not only the economy, but also on just some investments and looking at some things, because some of these charts are ready and poised for a breakout, and others you can definitely use them as opportunities to short. In either case, with that being said, I have some great announcements coming next week. There's going to be a lot of new things coming out as far as new products, courses, and just some new updates to some of the changes that we'll be doing with the YouTube channel. So keep in mind, that's coming up next week. Check back on Monday, and I'll see you then. Thanks for joining me. Enjoy your weekend, and I'll see you next time.